So let me take this off let me hide my charts as I used to let me remove these diagrams. All right, so we're talking about risk management today. Risk management. So what is risk management? This topic is extremely important. It's of extreme importance, right? Extreme. You can be doing the best, you can be doing the most on your charts. You can be, maybe your analysis is on point, okay? But the only thing that will make you appreciate your efforts is risk management. Your win rate might be off charts, okay? But the only thing that will make you to be profitable at the end of the day is your risk management, okay? Somebody can make $1,000 now and lose all the $1,000. How is it possible? Lack of proper risk management. So this topic is going to be straight to the point without any too much long stories. So let me paint a scenario to us. Let's paint a scenario to us. Like I always tell my previous people, I can always tell them, you can lose 10 times. So I say 10 times. You can lose 7 times back-to-back losses and win 3 trades, and you still be profitable. Okay? You can lose 6 times, okay, back-to-back losses. You lose once, you lose 2 times, 3, 4, 5, 6 times out of 10, and you still be profitable. Okay, how is it possible? You will see that now. So let's use $10 for example. Okay, let's say capital. Let me change this color to black. Let's change the font to maybe 20. Okay, let's say capital is $100, right? Capital $100. Okay. Then there's what we call RR. RR is equals to risk reward. This is just telling us how much you're risking and how much will you earn at the end of the day. That's RR. RR means risk reward. How much you're risking, and if the trade goes in your favor, how much are you gaining? That's just risk reward. Risk, like I said, how much you're willing to let go if the trade goes against you. Then the reward is how much you will earn if it goes for you. That's risk reward. So our capital in this case study is $100. Now, in this case, our RR, our risk reward, is 1:3. It can be 1:7, it can be 1:10, it can be 1:100. So then, for this case study, our risk reward is 1:3. Now, what does it mean for our risk reward to be 1:3? It means if I'm willing to lose $10, okay, if it goes against me, okay, if it goes in my favor, that means I will gain $30. If I'm risking 10, I'll gain $30. If I'm risking 100, I'll gain $300. If I'm risking $1,000, I'll gain $3,000. That is what it means. The amount you're risking times 3. If it's like this, it is 1:5. So if I'm risking, for example, $100. Okay, I will gain $500 if it goes in my favor. So just take note whenever I say 1:3, or I ask you what is your RR, that's what I'm asking you. I'm simply asking you how much you're willing to target if the trade goes in your favor. That is what I mean. How much are you targeting if the trade goes in your favor? So if you tell me yours is 1:5, that means if at all you're risking $10, you're willing to target $50 if it goes in your favor. So that is it. The amount you're risking times whatever number you have at the end there. So the best risk reward is always 1:3. That's the best. Okay. If there are some people they do 1:10, 1:12. Okay. But in that case, they'll end up staying longer in the market to hit their target. So I would advise us to stick to 1:3, right? So that is one. So we now know, okay, let me still break this down further. So in this case, if our capital is $100, so let's say we are risking, let's say risk is equal to $10, then our reward equal to $30. So this is simply our 1:3. Okay, we're risking $10, we're targeting $30. I'll show us how to do it in real time. So you just stay with me. Very soon now this network will start misbehaving. So once it does, okay, maybe I'll open the WhatsApp group so that whenever maybe the network is not coming up well, you just send a message to the WhatsApp group. Okay, it's open now. So that is just the beginning of our plan. Because before you enter any trade in Forex, before you enter any trade, you must first of all understand how much you're willing to risk and how much you're willing to gain. It should be at the back of your mind first before you even do anything in Forex. Know how much you're willing to lose, know how much you will gain if it goes in your favor. That is the first step. Okay, now we've known how much we are risking, we know how much we are gaining if it goes in our favor. So let's paint a different scenario now. With this in mind, let's paint a different scenario. Let's paint the actual trade scenario, right? So in this case, we're taking 10 trades, okay? 10 trades, right? So we say trade one. Let me shift this so that you see everything. So we see trade one, right? Let me see if I can make this faster. Okay, trade one. Let's say let me arrange it serially so that it will be easy for us to calculate. So trade one, we lost. So if it's lost, then it will be minus 10, right? Trade two, okay, lost again. I want to arrange it serially. So that is how many? That is under minus 10, right? So in total now we've lost $20. So trade three lost. I want us to lose six trades in a row. So that's on that $10. Remember our equity, our capital is $100, right? So trade four loss. So we've lost how many? 4 trades in a row. So trade five lost. Even if it's not possible to be losing like this serially, but then I'm heading somewhere. So we've lost 5 trades. So let's lose on that one. Trade 6 lost. So 6 trades now, back-to-back losses. So trade 7 win. So if 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 it's a winning trade, so that means it will now be plus how many? Plus $30. So trade 8, a winning trade, now be what? Plus another $30. So trade 9, the winning trade, so it will now be plus another $30. Okay. So trade 10, the winning trade, now be plus another $30. All right. So let's do the total now. So total, let's say we losses, or let's say loss. How much did we lose? So in total we lost how many? $60. All right. And we won how much? Winning is how many? Is $120. So let's say net profits. I think that's the right word. If I'm not mistaken, I'm not wrong. So net profits is now $60. Okay. So I just hope this is self-explanatory. Just hope this is self-explanatory. Let's say you want to trade 10 times. It's the only way you lose all your fund is if you trade 10 times without at least any considerable winning. Okay. So this is a 10 trade scenario. So the first trade you lost from trade 1 to trade 6. You lost $60. Remember, you funded your account with $100. You funded your account with $100. And you've lost $60 remaining. How much? Remaining $40 remaining. So on that $40 remaining that you have, you continue, you did not give up because you know your risk management strategy. You already have your plan to curtail your risk. You already have your plan. Before you even start trading, you already know that if you lose 6 times serially, you still have hope of recovering. So this plan will not mess up your psychology. If you lose 5 times in a row, this plan will not mess up your psychology. If you lose 6 times in a row, okay, because you know if your target is 1:3, you will definitely recover. Okay, so from the 7th trade, you won $30. The 8th trade, 9th, and the 10th, you won all 4 trades. Now let's say we let me change the rating again. Let me change the plan. So let's say you lost 7 times. So this loss is minus under $10. So from the 8th, okay. So your losses now will be how many? Your losses will be 70. Okay. Then this will now be 90. Am I correct? Yeah, this will now be 90. Okay, 90. So plus and minus, okay. How much will it be now? So $20 to now be how much? $20. Okay, so plus and minus, even when you've lost 7 trades in a row, you lost $70 and you have 3 more. Remember, you funded your account with $100. and you've only lost $70. Remaining $30 for you to still trade. So the your trade 8, you got 30. Your trade 9, you got $30. Your trade 10, you got $30. So you now add this, you have 90. You lost how many? You lost 70. But the remaining three trades that you have, you now won how many? 90. So plus and minus. So your next profit now will be $20. Okay. So you can see in trading, you need to have a plan for everything. Risk management is key in the financial market. Risk management is key. And I'm not saying I'm not saying um, you will definitely lose in this particular, what's it called, call up, or in this particular lineup. No. There are times your first trade you win, second trade you lose, third trade you lose, fourth trade you win. So I just have to like arrange it this serially so that it will be easier for you to understand at first. Okay, it can come in any form, but the important thing is always have your plan, your training plan. Always have your risk management strategy arranged somewhere. Now, if I'm increasing my risk reward, maybe if I'm targeting 1:4 or 1:5, then I only need to win 2 times out of 10 trials to recover everything. If it's 1:5, for example, okay, two trades alone will give you $100. Two trades alone will give you $100. If it's 1:5, remember, if it's 1:5, you're risking, for example, $10 to gain $50, right? So if you win 2 times, to be $100, and let's say out of 10 trials, if you lose 8 times, if you lose 8 times, that's $80. So 80 minus 100 will give you $20. Okay, will give you $20. So you can see risk management is just everything. Your risk management is just everything. Okay, it's just everything. So, like I said, you lost 8 times, for example, with 1:5. You lost 8 times. So, if you win twice, that's $100 automatically. So you've recovered all your losses. You've recovered all your losses. Losing 8 times meaning you've lost $80. Okay, that $80 now you still have how many? You still have $20. You still have $20, right? You trade the ninth one, you got 50. You trade the 10th one, you got on that 50. Okay, that's 100. So you have $20 profit. Okay, even though you lost 8 times in a row. Now, what if you now win 3 times? Okay, that's $150. Okay, $150 minus how many losses? Minus $70. You see, you're still making good profit. You're still making good, good profits, guys. So it's all about your risk. But I'm not advising you to go for 1:5 or 1:7 or anything. But I'm not saying it's not achievable. But the problem with higher risk reward is the higher you go, the longer you stay in the market and the more it hits your stop loss. Right? Because remember, knowing my father game market, so you have to do everything with precision, as in clear calculation. Okay, you have the plan already. You don't go into the market looking lost without knowing what to do. Okay, because like I said, if you don't have a plan, if you lose 5 times, you start giving up. Like I've seen some people that once they lose one, two, three, serially 4, 5, they say, Forex is not for me. So it's okay. It's not that person will don't chop, now you feel trade tomorrow. They'll go and withdraw the remaining of their balance to go and eat or to go and do something else. They were not they don't have plan. They don't have a trading plan. They don't have a risk management strategy. Because even you that I'm talking to now, imagine you're trading now after all the training, you deposited $100, and that $100 we all know is over 150K, yeah, and you lost 7 times in a row. And I'm not even sure you have the patience. or the grace to even stay to the fifth one. Okay, let's say you lost 5 times, or let's say seven. Let's use seven now. You use what God cannot exist, what God cannot do does not exist, and you were giving yourself hope, 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 and you now lost 7 times. Honestly, if you're a newbie, you start doubting everything. One, you start tagging whoever that taught you is scammer or fake, or you end up saying Forex na scam and all that. You only say that if you don't have a risk management strategy. And it's practically impossible for you to lose serially 7 times. It's almost impossible. Back to back loss 7 times. Yeah, there are traders that they do have losing streak. Losing streak. The first day they'll lose, second day lose, third day, 5 days they'll lose. But they just need just 2 wins to recover everything plus profit. You get. So it applies heavily in trading. Because if you don't have this risk management strategy, you're going nowhere. You'll be walking like elephants and you'll be eating like ants. That's the truth. Because you, at the end of the day, you say, this thing is not profitable. Not knowing that you never had a risk management strategy. Okay. So I believe this particular explanation is straightforward. It's straightforward. Now let me paint on that scenario for us here. Let me paint one scenario. Let me move this thing aside. Now, with this now, I will explain how to use the long and the shorting tool. Now look at the right hand side here. If you're using mobile, where you pick your tools, where you pick those trend lines, you will see projection. So under projection, you see a tool called long position and short position. We use long positions to buy, we use short positions to sell. Now let's say we are selling, we are buying. So I'll click long position. Let me just drop it here. Now let me paint once. Let me do from here to here. Let's do precisely 3R. Don't worry, I'll show you what I mean by 3R on this tool. Now look at this number. Look at here. Please, one thing with this app is, as you're on this call, you can pinch your screen to zoom out so that it will be bigger. I don't know whether on my phone they do them, but you can try it if it will work from your own end. So pinch your screen if you're not seeing it clearly and zoom out. Just pinch and zoom out if it will be bigger. Now look at this. You see where they say risk reward ratio. Okay, just say risk reward. Okay, you can see the ratio. They say 3.05. You can see the ratio. They say 3.05. See risk reward 3.05. That's where you need to pay attention to. Okay, that's the main place you have to just focus for now. Risk reward. You see ratio 3. You don't need to put the 1 because it's always 1 ratio this, 1 ratio that. So we don't need to. I'm not talking about pips. So I'm not focusing on these pips. Okay. Now back to risk reward. So in this case, it's telling us that our target, the way this thing is, the height and everything, the target, the risk reward for this particular space is 3.05. Let us round it up to 3. So our risk reward here is 3. Okay. Let me paint on that scenario again. Let me drop on that one again. Let me take this the same height. The same height now. Stop loss, the same stop loss. Okay. Now look at this one is 3. Risk reward is 3. This one too is 3. Now, if let's say I'm targeting my risk reward is 2, that means my stop loss will be bigger. That means my stop loss will be bigger. Look at it. This is 2. You can see the difference between this and this one. The risk reward for this is 3.0. The risk reward for this is 2. This is 2R. This is 3R. Okay. This 3R has more advantage than the 2R. Why? If we're using the same amount to trade, if my own hit take profit, let's say I'm using $100, I'm risking 10. to get 3, to get 30. So if we're taking the same trade, if I'm getting $30, this person will be getting $20. Remember what we said about risk reward. 1:2 means if I'm risking 10, I'm gaining 20. 1:3 means if I'm risking 10, I'm gaining 30. So you can see the difference here is just the stop loss. Okay. The difference here is just the stop loss. There are different scenarios that will point in the future that you see the difference, the importance of each of these ones. Okay, they all have their downside. The other one too, it has its own advantage. They both have their own advantage and disadvantages. All right. They both have their advantage and disadvantages. You can have the same analysis, but our entry might differ. Our entry might differ. Even if it's the same analysis, I can if I now I reduce my stop loss like this, for example. Let me see, okay, like this. Okay. Now these two people now, they are fighting the same battle, the same analysis, but their entry, the same analysis, the same stop loss, but their entry might differ. It just depends on how will I put it. It depends on priority. It depends on how I feel it's more comfortable for me to take entry. Now, if I use this particular way, okay, to take my entry, you must not use the same thing with me. The only thing that will now inform your own decision is by what we call back testing. Back testing is simply you going back in time with a particular concept to check if it works. All right. Just like I want to buy Lamborghini now. Okay, if I've not used a Lamborghini before, I'll definitely need a test drive. Okay. If you go to a car dealer shop now or a car dealer, right, they will show different types of cars. Okay. If they know that you're maybe Cubana brother or chief priest, okay, they will allow you to even ride the car from, let's say you're in Abuja, they'll allow you to ride the car from even Asokoro to Metama or Asokoro to Gogolada Cell. Because they know you will not run, they know you're popular, they know is there's no you're worth that car. Okay. That is just test drive. Because they want to convince you to buy that particular model. Probably you came for a different model. Okay. They will have to give you different model that might be expensive than the one you came for. They'll ask you to test drive that particular car. So whatever I'm teaching you guys, the only thing that will make you to choose your own currency pair and stick with it, probably 2 or 3 currencies and stick with it, is what we call back testing. So you have to now back test whatever I'm teaching you with a particular currency. I say, okay, based on my back testing, I'm sticking to this pair. Based on my back testing, I'm sticking to 1:3. Based on my back testing, I'm sticking to 1:2. So your decision now is now informed. You're not taking decision based on what I've done or what I'm doing. You're making a decision based on what you've seen out of experience, which is back testing. So someone that is using this particular entry, you can see the risk reward here is 10, 1:10, right? Now, if I'm gaining $30 with this particular entry, stop loss and take profit, right? This person will be gaining $100. If I'm gaining just $10 for this entry, it's the same analysis, so it's the same everything. But the difference now is the entry. Okay, is the entry. Now, if this person is gaining $100 for this 1:10, I'll be gaining just $30. But what is the downside of these two entries? Now, this person that is targeting 1:10 might end up missing lots of trades, while me myself, I might not miss too many trades. For example, let's say this is your uh, Let me readjust this. Let me make it more realistic. Let's make it more realistic. Okay, these are two different. Remember, this is our setup, right? This is our setup. Now, you can see this person now, Mr. A. Look at Mr. A. With the same strategy. Let's say, let me use James and George now, for example. This one, this entry is for James. Then this one is for George, right? The same setup. There's no difference. Let me shift this thing. Let me to okay. Let me leave it like this. Let's manage this space. So this is for James, right? You can see this person cut this. Let me demark here. Let me take out this inducement. Let me just mark this inducement here so it will look better. Okay, you can see this now with everything in place, right? Now let's mark it for George. Let's do the same thing for George. Let's do exactly the same for George. I want it to be perfect. Oh, the space will. Okay, let me shift this thing. Let me shift this thing out. So I want it to be exact. Now, what did you notice? It's very clear on screen now. What did you notice? I believe it's very, very. You can all tell the difference. So you can see this is James and this is George. So James, when price retraced, price got to James' point of interest and hit James take profit. But George, the same entry, the same what's it called, the same analysis, the same concept, right? But what happened to George? George trade was never triggered because price got to this level and retraced. If in a week I take 10 trades, okay, if I take 10 trades, let me just assume all the 10 trades were in profit, right? All the whole 10, sorry, let's assume all the 10 trades they were in profit, right? For me, for James now, okay. This person, George, out of the 10, he might end up, it's only 5 that will be triggered. If I'm getting like 10 trades in profit, George might be getting like even three trades in profit. The only problem is just his entry. But the difference is that my 10 trades now, that my 10 trade, let's say uh, each trade will give me $30 times 10. That's about $300, right? So I will get $300. Let me write it here. Let me just explain something. They both have the advantage and disadvantage. So this person now will get $300 at the end of one trading week, right? So this one will get $300 in 1 week, okay? 10 trades. So then what about George that only took 5 trades? That's not that he took 5 trades. Is that he's when I was doing my own, he was doing the same thing. But when I was taking my trades, I was sending him the same setup. He took all the whole 10 trades, but not all the whole 10 trades were activated. Okay. But then what is this person risk reward? Is 10, right? Okay. His own is 10. So for only 5 trades that he took, so what is each trade 50? Each trade 50. Hold on, please. Where is this thing? I'm coming. Hold on, please. Pick something. Okay, I'm back. Okay, sorry, I'm back. All right. So each trade that is 10R, and he only his trade only five was activated. Only five trade activated out of 10. So each trade $50. Each trade is $50. Then times five, that's about 250. You can see the difference between George and James is just $50. Just, what if James, even the graph is even so, let's say James got 10 trades, all hit take profit. Then George, um, let's just say six. Okay, that's the same thing. The same thing. When I was struggling to even get 10 trades in a week, and George only got six in a week, he still averaged what I scored, the profit I got. He still averaged it. But like I said, I will not even be the one to tell you to stick to a particular target. But so far, so good. Based on experience, 3R always saves the day. 3R will make you to avoid unnecessary losses. Okay, based on experience, it will make you to avoid unnecessary losses. So that's just the advantage and disadvantage of both risk reward. The entry is just the difference. Your entry might be from the last order block. My own entry might be from my sweep order block. So it just depends. So the one you stick to will definitely come from your own personal experience from back testing. There'll be a day I will give for back testing. So I think I've done justice to this topic. So let's do I need to okay, so I've showed you guys how to use these tools. I've shown you guys how to use this tool. Let me see if I can see any setup to apply this long and short tool. Okay, let me clear my screen. Let me clear my screen at this point. Okay, let's see if I can mark out any setup that played out with our concept, everything in place. Okay. Okay, let me see if I can force one. Might not be 100%, but let me see if I can force one. Can I force this one? Let me go to 30 minutes. Okay, let's go for a buy setup. Okay, I can see one here. I can see type 2 here. So this should be our last question before we take questions. All right, so we have our sweep here. Very small sweep, but it's very much valid. Very, very much valid. When your sweep is close to your strong low, it's a very strong sign. Then we have our break of structure, right? Some of you, you will not be marking this place as your inducement. Fortunate's sake, just use your discount and premium to from your A to your C, okay? From your A to your C. The body of this inducement, it will not come down to discount. So there's no reason of you even using it there. So let's just delete it. From even with your eyes, you will see that it's not. If your relationship will like you, they will tell you, say, comrade, no use that place, no use that place. They fall our hand. So this is it. This is our type 2 shape. So this is our inducement. This one is very, very close. This one is very, 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 this inducement is very, very close to our strong low. So this one, I see we hit stop loss, but it will never hit stop loss based on our entry, based on our stop loss rules. We have stop loss rules too. So this one is not candlestick body. Probably if we go to M5, let's go to M15, sorry. I don't want this thing to be very small. All right, you can see on M30, it was candlestick body, it was candlestick wick, okay? It was candlestick wick, but on M15, you can see his body. So we don't normally take entries from 30 minutes anyway, from 5 minutes. So then we have this. So let's go back to 30 minutes because I've showed you what I want to, this is what I want to show you here. I want to show you why I still drill it across the week, because on M15, that week is body. So on M30, you can see is what is weak. So let's continue. So this is our type 2 setup, right? So I want to measure to know if my 3R will be secured, because if you look at this trade, you can see it finally went down and hit stop loss. So no matter where stop loss is, okay, if you're, let's say if you're targeting 10R, you might end up not achieving anything on this trade. That's why I said 3R will save us from unnecessary losses. So let me use my long 2 because we are buying. Let's say I'm taking my trades from this area, right? So my stop loss should always be a little bit below your strong low, a little bit below your strong low. But there are times, though in future you learn that with experience. Sometimes if you have low like this, you just use this low for your stop loss. That's just look at the line, look at it. You can see where I use the stop loss. With experience, so it's only experience that will teach you this. But on the norm, let's just do the normal. Stop loss should be a little bit below this, our strong low. There are some people, their stop loss is based on pips. They say, okay, their stop loss usually is within 5 or 10 pips. Okay. So let's say we're using this. Now you can see from here to this place is 3R already. You can see 3 point something, 3.3. It is. You can see from, look at the short movement from here to here, from this entry here to this place is 3R. You're done. You're done. You're done with that trade. You're risking $10, for example, and you're getting and you're getting what's it called, $30. You're done. Now, if my target is 10R, like the example I just showed you guys, let's adjust it. You can see how far I'm going now. This is 10. Look at it, risk reward. You can see 10. Let me take this thing forward. You can see you will not achieve that 10R and you'll be taken out from the market. You will not achieve that 10R that you're chasing. You'll be taken out from the market. So this person that is using 10R, out of 10 trials, he need at least 2 trades to be in profit. He will lose 8 times and it's not worried because he knows that he still have 2 chances to scale through. But you that are using 3R, within 4 or 5 trades, you're done with your target for the week. Like I said, if this person is targeting 10R, the person will be taken out from the market. This is a losing trade for that person. If he's targeting 5R, let's see if this one will still cover 5R. Okay, 5R, this one will be okay. But then, I don't believe in anything higher than 3R. Alright, so let's look for our entry, the last one I promised. Let's look for our entry again. Let's look for our setup again. Let me go to 1 hour time frame. Some of you that will give you assignment, you will tell me that, sir, I did not see the setup, or I did not see the setup on this pair that you gave me. You're not using your eyes properly. Okay, so let's look for one. I'll just look for anyone. I'll look for any setup, maybe a buy or a sell. Okay, this will actually be a counter trading. It's counter if you're trading against the trend. That's the trend is buying and you want to sell. I can see one setup for a sell here. A very risky one at that. Like I said, you can see we have what? We have our sweep here. We have our break of structure here. We have our inducement here. Price came back, mitigated and sold, but it did not last long. Let's just mark it out. Though this one is we trading against the trend, which is not advisable. So let's just mark it. Once you train your eyes very well, you will see these things from anywhere. Let me adjust this one. So for a week, okay. So this will now be our inducement. If you're in doubt, you just use your premium and discount tool to check it if it's around your premium. Okay, you can mark the other breakout structure. So we now have this, right? So let's bring our shots to let's see if we'll get our 3R from this. Okay. So remember what I said about stop loss, a little bit higher than your strong high, a little bit higher than this. Okay. So I'm going to cover 3R. You can still look at this risk reward. See if I'm adjusting it. Will it give us 3R? Will it give us 3R? Unfortunately, this trade will not give us 3R. So this is 3R. So unfortunately, this will not give us 3R before it took us out. So this is a clear example of do not trade against the trend. There are times that you get lucky, but you end up losing more because you're doing the wrong thing. So I need one more setup. I need one more setup, guys. Right, I just hope somebody's learning something, sharp. Okay, I can see something here. So you can see we have a sweep here. We have a sweep of this. We have our breakout structure. We have our strong high. We have our inducement. See how far our inducement is. You see how far. This is 1 hour time frame. Probably on 15 minute time frame, this one will be a clear inducement for you. Oh, okay. So I think we're done. We are done, right? So let's open the grounds for questions.